But without further ado here, we'll break into our presentation topic today, which is your guide to New Jersey real estate investing. I'm Aaron Fragnito, one of the founders of People's Capital Group, and we focus strictly on investing in New Jersey. So we've done about 300 transactions here, and we've kind of learned how to navigate this market pretty well over the last 11 years of investing here. In fact, I started as a realtor in 2010. So about 15 years I've been working in the New Jersey real estate market, both as a realtor and an investor, a buyer and seller. So quick disclaimer, this is not a solicitation for funds, tax advice, or investment advice. Our investments are not FDIC insured, may lose value. Past performance does not constitute future performance. Any investment opportunity we do have available is for accredited investors only, and no investment decision can be made until you review private placement memorandum in its entirety. All right, let's get on here. So the reason we feel that we're able to speak about how to invest in New Jersey wisely and profitably is because we've done it ourselves here. For about 11 years, People's Capital Group has been helping people build and preserve their wealth through passive real estate investments located strictly in northern New Jersey. We generally buy mismanaged Class C and B apartment buildings, sometimes Class A as well. We're underwriting a Class A right now, moving forward on that. That's exciting. But our bread and butter is really vintage multifamily apartment buildings that we buy for a discounted price, off market, through our connections. And we reposition them with our in-house property management company. We then produce cash flow for our investors. We refinance over time and eventually aim to sell them for a final liquidity event as well. We also do fix and flips. We have a debt fund that investors invest in and earn a quarterly interest payment if they prefer a fixed rate investment. And with our debt fund, we fix and flip properties. We buy land, we flip that. We do wholesales as well. So Seth Martinez and I, we've done a lot here in New Jersey. We tend to buy within an hour of Manhattan, so mostly North Jersey. But we've also bought apartment buildings in South Jersey, like Paulsboro out near Philadelphia there in the Jersey side. We've reviewed deals in Trenton, but generally we're within an hour commute to Manhattan, so mostly North Jersey is where our experience has been. All right, so our topics today, here's our agenda. We're going to focus first on how to invest profitably in North Jersey, New Jersey real estate. As I said, most of our experience has been in North Jersey here, but we'll touch on South Jersey as well. They're really two different beasts, aside from the sports teams, of course. Although it's better, most recent football season, you'd be better off in South Jersey, that's for sure. Navigating red tape in a blue state. That's interesting. There we'll break into how we produce strong returns in a blue state. A lot of people say, why do you invest in New Jersey? It's a blue state. It's not landlord friendly. So that's an interesting slide we'll go through there. Where are the best deals in New Jersey? We're going to talk about specific cities. I have a list of about 7 or 8 of them that we really like and why we like them. And so I'll suggest specific cities to find great deals in New Jersey and strategies to do that, and why New Jersey is one of the best states to invest in. Sure, I've been born and raised here my whole life and done all my real estate investing. I'm a little biased, but I'll explain why we feel it is one of the best states to invest in. So first of all, how to invest profitably in New Jersey. So what we find here in Jersey is that it has a very old housing stock, a vintage housing, as they call it. Vintage apartment buildings, vintage single-family homes. And these properties are old. New Jersey's been around a while. We have quite a history here. You go to Morristown, you can, one of my favorite places to hike is up at Jockey Hollow, where George Washington camped for 2 winters. I bring my son up there and we learn about history and we get some outdoor time in. New Jersey has incredible history, right? Washington crossed the Delaware here. So a lot of vintage housing, right? A lot of these older cities that have just housing stock that can be 100+ years old sometimes. Of course, you want to get a little bit newer than that, but finding older properties can be a good investment strategy. We buy a lot of older properties. We buy a lot of Class C, Class B vintage apartment buildings that are in need of updates and renovations and improved amenities. We just bought a 42 unit in Passaic, New Jersey. This was probably built between 1940 and 1950. It's a classic mismanaged, outdated apartment building, trash in the backyard, trash in the basement, no amenities for the tenants. Units are outdated. Units are rented like 30% below market value, but in a decent area. So it allows for less than an hour commute in Manhattan, right near downtown Passaic. There's 11 bus stops within 5 blocks. There's a lot of schools right around there, private school right up the block, elementary school 2 blocks away. So, decent location, older property. And you can buy those often for better prices, of course, than brand new properties. So we like vintage housing, and especially when it's in need of improvement. Mom and pop landlords. So you have a lot of people that move out of state here in Jersey. Something happens when you turn 65 in New Jersey, you are just sent a plane ticket to Florida, and you have the option to accept it and get on the plane or stay in New Jersey. A lot of people get on that plane and move to Florida or North Carolina. So you find a lot of worn out landlords. Maybe they moved out of state, maybe they haven't, maybe they're thinking about moving out of state, they're about to retire, right? So all kidding aside, you do have a lot of worn out mom and pop landlords here in the state, kind of an aging demographic. And we think there's a winner up here. We kind of forgot that last few years, but this year we actually had a winner. There was some snow and ice, and if you're getting your retirement age or golden years, it's kind of a pain in the neck, right? So you want to move to places that don't have snow and ice. Um, Although I actually love the four seasons of Jersey, of course, Jersey bias guy here. So, this is a common thing we find: older landlords not managing their properties the right way, mismanaged properties, outdated. It goes with vintage housing a lot. Generally, these are older properties as well, and maybe they've built up a lot of equity in them, and they have a ton of equity, and they're not going to be too aggressive on price. They're not necessarily professional landlords or professional negotiators either. So sometimes you are able to buy these for discounted prices with a lot of value add and help those owners move on to a warmer state where they're looking to move to. Landlord friendly markets. So people say, why do you invest in New Jersey? It's not landlord friendly. I say, nay, actually, there are many cities of New Jersey that are landlord friendly. Rent control changes from municipality to municipality. I have like 2 more slides on that. So it's a big part of understanding New Jersey investments. So research the rent control laws as you invest or seek to invest in a municipality. Focus on cities that are landlord friendly. If they're not landlord friendly, maybe you shouldn't be investing there. Focus on cities that do want you to spend your hard-earned money and time investing in their city and are more landlord friendly. Markets that are not landlord friendly actually are still super hot. Like even like Jersey City, Hoboken have very restrictive rent control laws. But they're actually still great markets to invest in. I mean, real estate values have flourished there, but you have to understand how to navigate that rent control. Private auctions. So public auctions, sheriff sale auctions are not so great. Seth's my business partner, other owner of People's Capital Group. We've been investing in public auctions for many years. We did amazing in 2016, 2017. We used to go to sheriff sale auctions, scoop up 2 deals a week, flip the contract, wholesale the bid for 30% more than we had under contract. And I think it was in 2016, we made over $1 million in wholesale fees just from sheriff sale auction properties. So we really made hay while the sun shined. However, those days are over. Public sheriff sale auctions are no longer the gold mine they used to be, and we do better at private auctions. These can be private auction houses and private online auctions. I know that's kind of an oxymoron, private online auctions, but what I mean by that are they're not public sheriff sale auctions. They're more like private services that auction off properties, estate sales, and things like that. You don't always get a deal here, but you can source them now and then. Normally more in commercial real estate, not residential real estate. Motivated developers. So what we're seeing right now, and my favorite place that I'm investing in right now, is motivated developers. There's been a surge of new development hitting the market over the last 2 years. See, interest rates were extremely low for many years, and real estate development made a lot of sense. So, over the last 5 to 7 years, a lot of development started happening in New Jersey. Those developments then got finished and those units hit the market and began leasing up over the last couple years. And now these developers are becoming landlords and they don't want to be landlords. They want to cash out of their development. They've worked 7 years sometimes to get to this point of a beautifully built property, fully stabilized. Yeah, they might be making a little cash flow, but then interest rates have gone up and loans tend to have flexible interest rates sometimes, or maybe they got a 5-year fixed and that's expired, or they, still have an interest rate that's it's very high. So they're motivated to sell. They're motivated to cash out their equity and move on to the next development. A lot of developers don't like really being landlords. You're either kind of a buy and hold guy or a development guy. Not all the time, but usually. So look for those motivated developers and builders that have properties that are stabilized and brand new assets you can buy for good prices. Also, realize that cap rates have increased, values have gone down. We are in this perfect little time right now where prices in North Jersey and really all throughout the country, but especially New Jersey, have come down for the first time in years. It's easier to buy a deal now than it was 2 or 3 years ago. It was extremely difficult to make a deal pencil out with cap rates at 4%, 4.5% back in 2021 and 22. So right now we're buying brand new construction deals. We're seeing them at 6 caps, six and a quarter caps. We're seeing vintage real estate at 6.5 to 6 and 3/4 caps. These properties used to be going for 150 to 200 basis points lower on their cap rate. So just phenomenal opportunity to buy quality real estate for a discounted price if you know the right people. How to source those deals. Once they hit the market, they go for higher prices. All right, navigating red tape in a blue state. So, like as I was saying, a lot of people say, why do you invest in New Jersey? It's a blue state. We're actually turning purple if you look at some of the recent elections. Kind of exciting. Rent control here is a challenge, and rent control changes per municipality, as I was saying. So focus on cities that have landlord-friendly rent control laws. Price in cash for keys. Okay, and I'll go through a list of cities in my next few slides of cities that are good to invest in that have more landlord-friendly laws. But when we buy a building in a rent control area, we like Newark, we like Patterson. We just bought a building in Passaic that has 10% rent controlled tenants, 100% vacancy decontrol. So when those tenants move out, if those tenants move out, those units go right to fair market. And if you underwrite these buildings with the tenants accepting cash for keys, it could be a phenomenal growth in your value and profit in the deal. So when we buy a building, we try to allocate money for cash for keys. The lower a tenant is paying, the more you'll have to allocate to assume they'll accept your cash for keys. And cash for keys is kind of an art. It's not so much science. It takes time. You need to build a relationship with the tenant as they see construction going on throughout the building, a new demographic of tenants moving in. A lot of their friends are moving out. Things are changing, and change is never good. So a lot of tenants will not accept your cash for keys offer right when you buy a building. They don't like it. You just bought the building, new sheriff in town, you know. But then a couple of years go by and their buddy moves out that lived down the hall. There's been construction going on in all the units. Millennials are moving in. This is frustrating. And often what we see is those kind of holdout tenants become more motivated and they say, okay, what's your offer again for the cash for keys? And we'll allocate usually $7,500 to $10,000 to pay someone to move out of a unit. Not always. It could be less depending on the difference in what they're paying. But if someone's paying rent and they're in a rent controlled unit for $900, and that unit can be leased for $2,200 a month, um, then you got to factor that in to, well, that increase in value, right? That's $1,300 a month additional you could earn. That's about 15 grand a year. Well, if your building is being valued at a 6% cap rate, that's that's a six-figure gain in your property value. I believe if my math is on there, but for the most part, you got to look at the property value growth by moving that tenant out. So you might say, "Oh my gosh, $7,500, $10,000, that's crazy." But it's like saying, would you pay someone $10,000 to gain, $80,000 in property value? Right? Well, yeah, probably, yeah. So that's how you have to look at those cash for keys negotiations. But it is a bit of a delicate dance. You have to work within the rent control laws, respect the rights of the tenant, and also um, understand it's not going to be a fast process. It takes time. Permits. So we try to avoid projects that require a lot of permits. Um, Permits are a bit of a rabbit's a rabbit hole. We find that once you start pulling permits for a project and the town gets into your building, into that unit, all of a sudden they find more stuff you need to replace, more stuff you got to pull permits for. And it can be a rabbit hole, wormhole there. So it can really start to grow and grow what the town makes you do. For example, we have the building we just bought, Passaic, New Jersey. We pulled permits for it because we needed to. We were doing some renovations there. And the town had come in to give the C of O. They knew the unit was vacant and in disrepair. They said, you got to pull permits for the unit. So, okay, that's fine. So we pulled permits for the unit. We're renovating the unit. Now they say we need architectural drawings for the unit. So now we have to go hire an architect and get architectural drawings. And so one thing leads to another. And then next could be load calculations on electricity, things like that. Heat calculations. So it can get a little out of hand depending on the city. And generally, the rule of thumb is you want to avoid having the city inspectors walk through your units as much as possible. This is not legal advice. However, sometimes it is better to seek forgiveness than permission when it comes to permits. Maybe you're not sure. Maybe you're replacing a toilet and putting a new toilet right in place. That's called 1-for-1. That generally doesn't require a permit. Sometimes you can go to the permit office and ask someone, you'll get a different answer depending on who you ask. I'm taking out a vanity. I'm putting in a new vanity right in place. I'm not moving any pipes. Do I need a permit? Someone will tell you no on a Tuesday. Then that you go in on a Wednesday, you'll get an answer yes. I would go with the answer on the Tuesday, right? So that's what we try to do. Is really, it could be confusing what requires a permit, what doesn't. And generally, if you get it convoluted, we're not sure. Maybe it requires a permit, maybe it doesn't. Then usually we just go ahead and do the renovation without a permit. And then if they decide later on it does require a permit, we can pull the permit at that time. We always get the work done by licensed professionals and it's done right. So if a permit needs to be required later on, that can always be done pretty easily. Green card, 5-year state inspection. So this is required every 5 years by the state. I believe it's now going to 7 years, which is a little relief for landlords. But, this is one of the reasons people don't like investing in New Jersey. You have to know how to navigate the green card. Green card inspectors, they're just, they're tough. They're tough. If you get one that wakes up on the wrong side of the bed, they can run you through the ringer. Generally, they're going to nail you on a number of items, no matter what. If it's your first time getting a green card inspection since you purchased a property, you're not going to pass. You're not going to. It just they're not going to let you. It's almost just in their directive to make sure you find some type of violation. It could be a little bit of paint touch-ups. It could be, an exit sign that didn't properly light. It could be a loose handrail. It could be a window that doesn't open properly or stay open. So they're generally, especially on vintage real estate, they're going to find something. So pray you get a good inspector. We actually require our landlord to wear our property manager to wear a body cam during these inspections because we've had such abusive inspectors, unprofessional, verbally abusive, and we wear a body cam. And what we find, here's a good tip of the trade, is when you have a body cam on during these green card inspections, all of a sudden these inspectors act a little better and a little more professional, and they don't try to just nail you on everything they possibly can, or things that really are not even violations. Um, when you do get a bad inspector that over violates your property and property rights, we can escalate with the DCA. You're going to need to spend some time on the phone, but you can get it escalated to a manager. Often the manager will be experiencing similar complaints for that inspector, and you can get fines lowered. You can get violations dismissed, and get some headway if you get a manager involved, kind of move it up the line there, bureaucracy. Speaking of bureaucracy, you want to, again, like I was saying, avoid anti-landlord cities like East Orange. I'll tell a brief story about East Orange, not to scare you, just to tell you what I've experienced in my decade plus of investing in New Jersey. One time we set up a meeting with the mayor and the bureaucrats of East Orange, and we said, we'd like to sit down with you and explain to you how we can simplify and help your system of C of O's and C of H's. See, in East Orange, you need to get a certificate of occupancy and a certificate of habitability every time a tenant moves out. Two different inspections, and the fire inspector has to come through. So you actually need three different inspectors, three different bureaucrats to sign off on your unit when a tenant moves out. And they all can cite you for different things. So what we found was it was extremely cumbersome and delayed, and would really hinder the leasing process of our units there. So we set up this meeting, and we brought in realtors that work in the area, other landlords that work in the area, and we kind of went out of our way to set up this nice meeting of like all the real estate professionals that are very active in East Orange. Sit down with the heads of the government there, and we sit down with them, and they say, "Okay, Aaron and Seth, People's Capital, we went through all your properties, and we realized you didn't get a permit here. We saw trash in the front yard of this property. Here's a ticket for that. We did this, and here's a fine." And they ended up just coming at us like they were ready. They prepared. Their way of preparing for the meeting was to attack us and our properties and fine us. And it was a devastating experience. We had realized these people were completely against us and just assumed we were the enemy. Here we are paying ridiculous taxes to this city, paying their salaries, and just not an ounce of gratitude. So really frustrating experience with East Orange. Because of that, we do not invest there anymore. We don't want to reward people that are anti landlord, anti capitalism, and overly bureaucratic with our hard earned money. We pay a lot of tax dollars to these cities. And if they're not going to appreciate us, then we're going to go elsewhere with our money. So when you do buy a property, allocate funds for green cards, permits, delays, and bureaucrats. Taxes and insurance. Complete a tax abatement and shop around for your insurance aggressively. Insurance prices vary from broker to broker and carrier to carrier significantly. So just like you shop around for your debt and your property, shop around for your insurance. We'll generally talk to 3 or 4 insurance agents when buying a property to determine the best price for insurance. And also a tax abatement can help you lower your taxes after purchase, but that's no guarantee. So where are the deals? By the way, this is a picture of a Class A building we are placing under contract, and we'll be putting this out to our investor base. We have a family office and a couple equity groups looking at writing the entire equity check. So if that doesn't come to reality, then we will be moving this on to our investor base, and you'll get an email regarding this offering if you're in our email system. If you're not in our email system, if you didn't for some reason get an email about this webinar, then be sure to get in touch with us here. Reply to us or email at info@peoplescapitalgroup.com. We can make sure you get our next private offering. Beautiful Class A building we'll be acquiring here and inviting investors to participate in. All right, so where the best deals can be found. Bayonne, New Jersey. We like Bayonne. We find it to be landlord friendly, somewhat most part. They could be a little tough with their permitting. You know, we bought a building there in 22, and we were held up by the construction office and zoning department. They are tough. There's no doubt about it. But there's a difference between being tough and unfair, right? We felt East Orange is just unfair in that story. Difficult and slow, you kind of expect that, you know, but Bayonne, in their defense, they can be somewhat fair, just tough. But the landlord friendly rules there for the most part. When a tenant moves out, there's 100% vacancy decontrol. So if you were to work out a cash for keys with the tenant, or they just move out themselves, then that unit immediately goes to fair market rent. Where in some other cities, you have to go in front of the board and show them receipts of how much you invested in that unit and renovation, and then they'll allow you to increase the rent a fraction of that. And that's like Jersey City. It's just a big headache and a big process. So Bayonne doesn't have that. It's also easy commute to New York City. You have the ferry there. You have a light rail. It's right near booming Jersey City, but you can get a lot more real estate for your dollar in Bayonne over Jersey City. And so it's more affordable, and it has a pretty old housing stock. You know, Bayonne kind of has that old blue collar feel to it, although it's becoming quite gentrified. But you see a lot of old housing stock there, buildings from the pre-war buildings and that are ripe for repositioning. Beautiful brick structures that we look to purchase there. So we bought one in 2022, and we just submitted an offer on another one, but we were outbid. It's a pretty high demand market, very desirable market. It, literally borders Jersey City, which is one of the hottest real estate markets in the state. But you'll notice Jersey City is not on my list of where the best deals can be found, because the landlord tenant laws in Jersey City are not landlord friendly. So we really don't like investing in Jersey City. The only thing we do in Jersey City that we'd be interested in is a potentially fair market building, which is kind of complicated because Jersey City kind of has municipal rent control, but that's a whole different conversation. Or ground up development in Jersey City can be good. But we're talking more about existing assets in this presentation. All right, Newark and Paterson. So Newark and Paterson do have rent control restrictions. Newark is tougher than Paterson, but they both have, I believe, a 5% max increase in rent per year. Newark, now, if you go to evict a tenant, you have to be on the rent control registration. So you need to register your rents, where you used to kind of be able to not have to do that. But now if you go to evict a tenant and you get all the way to court, which takes like 2 to 3 months, the judge will say, well, show me the registration on the rent control. And you're like, well, I didn't register my rents with the rent control office. The case will be delayed or even dismissed. So you need to be aware of that. In Newark, there is a rent control registration. You want to make sure your rents are registered too. However, new construction in these areas is super hot. These markets are hot. We do find good deals in Newark and Paterson. We own a lot of deals in Newark and Paterson. I wouldn't say the local government's particularly landlord friendly, especially the rent control office, but they're not as bad as some other cities. But as far as just buying and renovating existing assets, there are deals to be found here. I think ground up development has a lot of potential in Newark and Paterson, especially Newark. We really do like Newark. I mean, it's really an incredible city. It has, Newark Airport, one of the best international airports to use in the area. It has incredible transportation options. Newark Penn Station gets you into Manhattan less than 30 minutes. You have a Newark Broad Street. You get on New Jersey Transit there, get right into the city in like 15 minutes. So really great transit options, a lot of schools. You have a number of colleges, Rutgers University. And we've done well in Newark. The first building I bought in Newark was near Rutgers University. 5-unit I paid $135,000 for. That would probably appraise for like $850 today. So, Newark has just boomed. It's got a decent downtown area. It's kind of come alive. And we see a lot of the same things happening in parts of Paterson. So keep an eye on Paterson as well, as long as the new mayor doesn't go to jail, as the last 4 have. So that's always plagued Paterson. So you want to watch out for that. Passaic, landlord-friendly rent control. So Passaic does have pretty landlord-friendly rent control. The rule in Passaic is if you're over the age of 60 and you've lived in the unit from before the year 2000, then rent control applies to you. And it's either a 5% limited raise or a 3.5% limited raise. So generally what you find is like not a lot of tenants fall into that category, right? It has to be both older and in the unit for what, 25 years, right? So those are true legacy tenants, so generally buildings we're underwriting have like very little tenants that are fall in that category. Like the building we just bought, 4 out of 42 tenants fell in that category, right? So about 10% of the building fell in that category, which is workable. You can work with that. A lot of old housing stock there, just like all these cities. Strong city plan for Renaissance in Bayonne, in Passaic, New Jersey. You could say that for some of the other ones as well, especially like Newark and perhaps Patterson. But Passaic, I think, really has a good plan, a good city master plan. By the way, when you're looking to invest in a city, look at the master plan for the city. That'll tell you where ideally the city is going in the next 5, 10, 15 years, right? I mean, if you looked at the Newark master plan 15 years ago, you'd say, yeah, this city's going to boom, and people saying, why are you buying a Newark? What are you doing? Newark's a mess. And I mean, those properties now are worth 4 times what we paid for them. So Passaic, I see a lot of the same things going on. Values have already grown there a lot, near New York City. It borders Bergen County. Bergen County is one of the most desirable counties in New Jersey with some of the highest home prices. Passaic literally borders that. It's also near Patterson. So it's kind of a little mix of both inner city, but also near very desirable, more suburban towns. The rent control is a little easier to navigate. When those tenants do move out that are rent control, there's 100% vacancy decontrol, meaning those units go straight to fair market without additional city approval. All right, more places to find deals. So we see a lot going on in Kearney. Kearney. I call it Kearney. There's a lot going on there. Some good new development opportunities we're underwriting. Just had a conversation with some brokers today on a deal we're trying to put together. My team is underwriting another deal there. So we like Kearney a lot. We see some nice new construction development opportunities that fall in the category I spoke of on the earlier slide, which was about motivated developers. People have developed nice pieces of real estate, and you can buy these brand new construction properties for discounted prices, where they used to be going for 4.5 caps and 5 caps. These brand new Class A buildings are selling for 6+ caps. So take advantage of that. It's not going to be forever. Same with Harrison. Harrison has a little more rent control restrictions than Kearney, but a lot going on in both these cities. They border each other. Red Bull Stadium there, I think it's actually called something else, but Red Bull soccer team plays there, the Major League Soccer team, which is pretty cool. If you haven't caught a game at whether you're into soccer or not, I'm not really into soccer. My buddy is, and he brought me to a game a year or two ago. I had a great time. It's really a great stadium. It's easy to get into. You can take the train. It's easy to park there as well. Same with Newark has Prudential Stadium. You can catch a Devils game there if you're into hockey. I just brought my son to Devils game a couple months ago. We had a great time. He fell asleep in the first period. He's 3. But we had a great time. The lights were really cool. The intro show was really cool. Just a lot of fun things going on in that kind of Harrison, Newark area right now. Very up and coming. Tons of development there. Kearney as well follows suit. Decent rent control. And, there's nice restaurants there too. Some of the best food, really a little bit of nightlife there where you wouldn't have seen it a decade ago. There is some really nice restaurants, nice places to go out, professional sports teams. And so check out that area for investment. And finally, Rahway. We own a nice building in Rahway near the train station. Rahway has no rent control or very limited rent control restrictions. A booming downtown area, and that's what we like to focus on, right? Look at Newark. They started with their downtown. They worked out from there. If you don't have a downtown, then you don't have a heart. That's like the heart of the city, right? It's where the culture is. It's where the excitement is, where you go out to eat. Other parts of the city can be less desirable. That tends to happen. But once you start seeing that downtown get created and restaurants move in and sports teams and Whole Foods and Starbucks, well, now you can see that gentrification start to happen as we were seeing in Newark. Rahway, same thing is happening. You have an art center down there. You have like live shows you can catch. It's pretty exciting what's going on in Rahway. Easy commute to New York City, heart of Union County. You could also say maybe Plainfield is, but I think more is going on in Rahway. Nightlife, a good renaissance happening there. Some like notable mentions here, I would say also not on the list necessarily, but Plainfield, New Jersey, you can get a little more real estate for your dollar, but they do have rent control there. And there are areas that are less desirable than others, like any inner city area. I love Morristown. Good luck getting a good deal in Morristown, very desirable location. And Somerville here. We are located in Somerville, New Jersey. A huge development just came in right next to ShopRite here. So if you've been following Somerville at all, again, that downtown strategy, right? Somerville didn't really have a downtown until like 10 or 12 years ago. Then they really did some nice brickwork and they made this nice main ave. There's a lot of restaurants here. There's like 15 restaurants. There's a really nice steakhouse. I'm forgetting the name of it, but it's in Somerville, New Jersey. You think like what their like locations are like, Manhattan, like Miami, Las Vegas, and like Somerville. You're like, what? So just some beautiful restaurants here in Somerville. So, the notable mentions there for secondary cities. We always like New Brunswick also. If you want to go further out a little bit, Trenton. I think Trenton has room to grow. It's one of those last remaining places you can get a decent property. You're going to invest a little more for cash flow in Trenton than equity growth, but keep an eye on that city out there as well. But just in general, if you're within an hour of Manhattan, the demand for housing is strong. And so that leads me to why New Jersey is one of the best states to invest in. Now, of course, I was born and raised in New Jersey here, going to the Jersey Shore and partying at Bar A. Got some great stories from that. I went to Rowan University. I majored in entrepreneurship there. I recently went back and wrote and taught a course called Real Estate Entrepreneurship at Rowan University in South Jersey. Half my friends from Watchung Hills went to Rutgers University. I had a lot of fun times there in my earlier days as well. And lived in Hoboken for 3 years as a bachelor. Had a great time with some buddies there, and been in Jersey my whole life. Born and raised. I've developed a company here. We've done over 300 transactions in New Jersey. I've gone skiing in Mountain Creek. I've laid on the beaches of LBI. I've partied in the clubs of Hoboken and Atlantic City, and so there's a lot to do here. Fine dining, great universities. So it really has a lot. And of course, I'm biased being a Jersey guy, but the most densely populated state in the country, strong schools, nice quality of life, desirable neighborhoods, many forms of transportation, proximity to New York City, easy commute to New York City from most North Jersey cities. COVID has changed how people commute, allowing them to live further from New York City. That's slowly kind of changing back, but we do see a lot of people going to the city now 3 days a week or 2 days a week. So that's a big difference than 5 days a week. So now living an hour away from the city is reasonable, or even 90 minutes out from the city, which really brought a boom to a lot of these North Jersey locations. If you're not commuting into the city 5 days a week, well, you could live a little further out. You could live in Morristown. You can live in Somerville. You could live in areas of like Rahway or so, because the commute is happening less. And then finally, low inventory. So high bureaucracy equals slower development, which equals less housing inventory, which equals higher property values. So many people live in New Jersey. There's an insatiable demand for housing here. It is a blue state. Therefore, it is harder to develop. It's a slower process. There's more restrictions and bureaucrats, so you're going to have a slower development process. But what that means is basically insurance against our housing values staying strong. Look at Dallas, Fort Worth, Texas, a red state. Capitalism can reign free. Well, what happens is you have overdevelopment, right? Now, I'm sure they'll catch up. Look at Phoenix. You had overdevelopment, right? That really hurt property values and rental prices for some time. Now, the market will saturate the inventory there in time. I think that's already happening, but that happens less here in North Jersey and Jersey in general. And if I'll touch on South Jersey for a second, if anyone would like to learn about that, basically South Jersey is a whole different beast. It is far more rural. You have some shore locations that can, be decent investments. You have Atlantic City. We don't invest in Atlantic City. It's a bit of a gamble. So it's just, with online gambling happening, I don't see a lot of growth for Atlantic City. Kind of all it's got is its casinos, but now you can just download an app and you can gamble. So I don't know. Atlantic City is still fun, but it's not what it used to be. So the bottom line is generally if you're above 195, this is the ongoing dispute, of course, but I believe anything above 195 north of the highway 195 is considered North Jersey. That tends to have higher taxes, but also higher property values, and higher population density. What's amazing is South Jersey has like one of the largest parks and one of the lowest population densities when you get out to the Pine Barrens. So again, Jersey has it all. If you want to go out to the middle of nowhere and not be surrounded by anyone, you can drive 2 hours south to the Pine Barrens and be there. It's kind of spooky. It's kind of fun though, if you're into ATVing like I am. So anyway, let's break into the 5-year plan here at People's Capital Group. Just to give you a little insight on what we've done and where we're going here with our New Jersey real estate investments. In 2024, we closed on our latest acquisition, the 42 unit in Passaic, New Jersey. I discussed a number of times, and growing our AUM to 40 million. In 2025 here, we plan to refinance or sell 1 or 2 assets, creating liquidity events for many investors. These are apartment buildings we bought 4 or 5 years ago that are stabilized, and we've done our work there. We've brought the NOI up. We've improved the assets. We've gotten them now to the point of full stabilization. We've squeezed the juice out of them, if you will, and where they're ready for either a refinance or sale, so investors can have a nice, strong liquidity event. We also plan to raise $10 to $20 million and acquire a $20 to $40 million asset over this next year. 2026, we plan to raise about $25 million, acquire about $50 million in assets, and then sell or refinance 1 or 2 older assets as well. 2027, we want to raise $50 million and acquire about $100 million in assets. 2028 to 29, we're going to begin harvesting more assets, creating liquidity events for investors. And that's our 5-year plan here at PCG. Also continue to acquire properties through that time. Here's the core team. That's me, Aaron Fregnito, on the left. Seth and I have been investing in real estate here together since 2011, and we started our company in 2013. I'm primarily focused on working with investors and clients. We do our monthly updates and quarterly financials. I do 2 networking events a year, one in Jersey City in January, one in Somerset, New Jersey in June. We also do building walkthroughs. We're going to do an in-person building walkthrough of the Passaic property, most likely in April or late March. We also do monthly educational webinars. We have the Passive Investors Masterclass, which I do the last Thursday of the month at 3 p.m. And we have the monthly podcast, the Passive Cash Flow Podcast as well. If you want to join our network there, you can email us at info@peoplescapitalgroup.com, or you can find us on Meetup at NJ Real Estate Network on meetup.com. There's Seth Martinez. He handles the debt fund. So he manages the debt fund, which is fix and flipping properties, buying land and flipping that. Investors invest in the debt fund. They earn a quarterly interest payment between 8 to 11%. The more you invest or the longer you invest for, it increases that interest rate. Seth had sold a medical billing company and was flush with cash. I was a realtor, learning the business, doing short sales and REOs. And we teamed up. We met at a networking event in Garwood, New Jersey, when John Steiner, we used to do his networking events there. And I was speaking. Fake it till you make it was my topic. And we met each other, did some deals, and eventually started People's Capital Group in 2013. Seth manages the management company and operations of the business. I'm more on fundraising and client relations, marketing, and branding. Lena Delgado is our property manager. She's extremely experienced and hardworking in property management, bilingual, and able to handle our staff and tenants in our property management company there. And she's able to make sure our rent collections are strong, our contractors are being managed efficiently and effectively, our projects and our repositionings are getting completed on budget and on schedule, and she oversees our property management and independent contractors and our staff there, and Seth oversees Lena. Dana, our bookkeeper, she makes sure our payments go out on time to investors. These are ACH deposits right to our investors' account based on quarterly cash flow and in large liquidity events upon refinance or sale of assets. She makes sure our quarterly financials go out to investors on time. These are emailed right to our investors every quarter, a balance statement, a profit and loss statement, a distribution sheet, and this shows investors exactly what's going on with their investments and their properties, along with also monthly updates that I send out that are very detailed and transparent. We also do our K1 tax returns, so investors get their K1 tax returns quickly. In fact, we're already going to start sending those out to investors here and get that done over the next week, which is uploaded right to our investor portal for our investors to access with ease. So we work with a lot of independent contractors here. This is kind of how the sausage is made. You know, we have a number of contractor teams, independent contractors that get paid on a performance basis, on a project completion basis. We generally have 4 to 8 crews working at any given time, and multiple general contractors working to manage those crews. We have a team of leasing agents, some that are specialized in leasing Class C and B buildings, others that specialize in Class A buildings. You want the right agent for the job and a high level of screening and qualifications for each new tenant. The more you screen your tenants, the more time you spend up front leasing your vacant units to qualified tenants, the less time you spend down the road dealing with evictions, which is about a 90-day process in New Jersey. You want to avoid that at all costs. We have many content specialists, virtual assistants that work with assisting in the podcast creation. We have over 170 podcast episodes. We actually have hundreds of educational videos, dozens of webinars. We have ebooks and more. This is all at peoplescapitalgroup.com. You can check out all of our free educational content there. Also, our YouTube page, you can put People's Capital Group into YouTube. You'll find us there as well. IT professionals, we have an investor portal where you can log in as an investor, see how your investments are doing, similar to Vanguard account or something like that, or your stock portfolio. But instead of logging in and seeing stocks, you see real estate investments. There you can get access to monthly updates and quarterly financials and annual K1 tax returns anytime, and check out upcoming investment opportunities and past performance. We work with a number of virtual assistants. I believe I have 4 myself. So we're a big fan of kind of running a lean and mean operation here. The more we can keep our costs down and our quality high for our investors, but the more we keep our costs down, the less we have to charge and fees and equity, and we can pass those savings on to our investors. So we also have tax specialists and 1031 intermediaries. We do accept 1031 capital on a case-by-case basis. Generally, the minimum is $1 million for that, but we can go lower. If you're considering doing a 1031 exchange or considering selling your property, get in touch with us. I'll put a link to schedule a call with me, Aaron Fragnito, in the chat, and I'll do that at the end of the presentation here. You can schedule a call with me. We can talk about your strategy to sell your property, see if you can 1031 into a passive investment with us here at People's Capital Group. And of course, our CPA and tax firm we work with makes sure we get our tax forms out on a timely basis, which tax time is now. Attorneys, we work with a handful of skilled and experienced attorneys on every facet of the real estate world, residential closings, commercial closings, landlord-tenant law, affordable housing, corporate attorneys, SEC attorneys, and the list goes on. We use different attorneys for every single legal process we have. Okay, so for all those things I just mentioned, we use a single different attorney, right? We would never use our residential attorney to close commercial deals. They're completely different beasts. We would never use our landlord tenant or our eviction attorney to handle our LLC corporate documents, right? Completely different things. We even have different attorneys, right, for the PPM creations and the closings of documents. So you want a corporate attorney for that and really an SEC specialist. Property and due diligence and acquisition experts. So we have a very skilled underwriting team. We'll underwrite hundreds of deals to close on one for our investors here. We work with a institutional level underwriting group that used to underwrite for UBS, which acquires multi-$100 million assets. Our underwriting models are extremely in-depth Excel spreadsheets, and we have a very professional level pitch decks and basically a marketing documents done for all of our investment opportunities that really go into a very large amount of depth and background on the property and ourselves as well. We work with bankers and realtors, broker dealers, other real estate specialists to ensure each property is properly executed from A to Z, equity placement agents as well for some larger raises. And we have about 100 private investors that invest with us here at People's Capital Group, from high net worth individuals to family offices to accredited investors. And we just want to say thank you to our investors. You know, we wouldn't be where we are without you. We are only as successful as our investors. Our success is your success. And since 2013, we've been helping our investors build and preserve their wealth in real estate here in New Jersey, strictly North Jersey. And we would not be succeeding without the loyal investor base that we have. So about 83% of our investors reinvest after a liquidity event, which we believe is the outcome of transparent investments, consistent communication, performance, investing and operating with integrity, and bringing well-vetted off-market investment opportunities to our clients who like investing again and again with us. Here's what we currently have out to our investor base. We're not really marketing this out to anyone, and we're not doing email blasts or putting it on social media. We closed on this in December. We just did our first cash flow distribution in January. But we do have a few more spots left in this. We have plenty of CapEx funds we're implementing into the building right now, but we have a little more room on the CapEx budget that we can bring a few more additional investors into the deal to just finish off the raise here and get this one completely finished. So we're targeting a 19% internal rate of return on this property. We have 1.9x equity multiple to investors. That means if one was to invest $100,000, they'd expect to walk away with about $190,000 over the life of the investment. It is a 5-year investment. It's for accredited investors only, which I'll go over the definition of that in a second. And the minimum investment is $50,000 for this 42-unit apartment building in Passaic, New Jersey. This is a Class C building we're repositioning into a Class B, your classic mismanaged vintage real estate property I touched on a few times in this presentation as well. The rents are about 30% below market value. It allows for a 55-minute commute through public transportation into Manhattan. There's 11 bus stops within 5 blocks of the asset. This is an off-market deal we bought for a great price, below market value. Classic mismanaged building, trash in the backyard, no amenities, trash in the basement, outdated units, rents far below market value. Cash flow from Q1, it's already distributing cash flow. And we target about 80% of the investment return in month 37, which is higher than usual with this property. And that we'll aim to accomplish that through a refinance, and then we'll aim to sell the end of year 5. Here's an example of a $100,000 investment amount. Cash and cash return from year 1 is about 2.6%. Year 2, as we improve the value of the asset, should grow to about 4.8%. By year 3, we're targeting cash flow about 9.2% as we stabilize the asset. By year 4, we go to refinance the building, get about 80% of the investor's capital back through refinance, and continue to cash flow about 5% a year or so through years 4 and 5, and then go to sell the asset year 5, creating another liquidity event for investors. All in all, on a $100,000 investment, you'd expect to walk away with about $190,000 In total, that includes your principal return. That's the addition, that's adding up the cash flow of the property, the refinance payout, and liquidity event upon sale. So cash flow starts low, but it grows from there. And we're already distributing cash flow on this asset. So as I was saying, we only have a couple spots left. We purchased this in December 2024. We have 13% of the capital stack available at this time. These funds will be used for renovations on the asset. We already have plenty of capital for renovations, but we're going to just finish off the CapEx raise as this is the only opportunity we have available right now. We do expect cash flow from Q1, but investors must be accredited. So that means an individual has to have an income of $200,000 individually, or $300,000 including your spouse, or a net worth of $1 million, not including your primary residence. Okay, that's an accredited investor. So you do have to meet that criteria to invest in this opportunity. Okay, 200 individual income, 300 including your spouse, or $1 million net worth, not including your primary residence. Okay. If you are not an accredited investor or you're not sure, let's talk, because we do have a debt fund that allows non-accredited investors to participate. What I'll do here is I'll put a link in the chat to schedule a call with me, Aaron Fragnito, and that will allow you to figure out if you qualify as an accredited investor and also answer your questions about this investment opportunity, our past performance, also any questions you have about my presentation today. And I'll put that in here right now for anyone who would like to schedule a call to learn more. That's it for me, ladies and gentlemen. Aaron Fragnito of People's Capital Group. I don't see any questions right now. If you do have any questions, you could schedule a call with the link I just put in the chat there. I actually have to jump to another meeting right now to talk to an equity group about sizable investment, about a $13 million investment in our next opportunity. So I'm going to go ahead and do that. But thank you so much for joining us here on another passive investor masterclass. We'll have another topic next month, so stay tuned. And again, if you have any questions or you want to start building your wealth and preserving your wealth with us here at People's Capital Group in high demand in North Jersey real estate, schedule a call, the link I put in the chat. We'll talk about your investment goals, see if they align. Have a great day.